Hey guys, the following is a conversation with Ben Yorke, head of ecosystem of Woo Network. Now, I know a lot of y'all are users of Woo Network or perhaps even hold their Woo token. Well, if so, you gotta watch today's interview because I'm gonna ask them how Woo Network is going to dominate the exchange space and a bunch of other interesting topics. Just strap in and enjoy. All right, Ben, let's just jump right in. So something that I saw on Twitter and that I personally agree with is that the exchange space feels super up for grab, like it never has been in the past few years, right? Big exchanges have collapsed, other ones are feeling the heat. So it feels like there's opportunity for some of the new exchanges, like perhaps Woo Network, to come in and grab market share like no other. So my question for you is, what are y'all's plan to grow 10x and dominate the exchange space in the next few years?
Yeah, hey Kevin. First of all, thank you for having me. I totally agree with that first comment. I think the exchange space is very up for grabs. We're seeing, the old playbook that exchanges have used. I think it needs some refreshing, and people who prioritize transparency, building trust, and doing things the right way. They have a very strong advantage, and I think some of the legacy exchanges will struggle to do so. Right. And as far as what we're going to do ourselves, I think it's things along those lines, but I'm really listening to users, providing tools that traders really need, and stepping back and thinking of the big picture, right? Like, what do people get into cryptocurrency for in the first place? It's obviously to take opportunities that exist in the market and invest in things that are somewhat meaningful, right? And when the current crop of exchanges, I think they are kind of caught in this in the cycle of focusing too much on growth and focusing too much on rolling out the next new listing or the next new launch pad. And inevitably with this type of mentality, this type of culture, it's often like the retail user who ends up paying the price, right? Because these are more unsustainable business practices. And so I think somewhat slowing down in different ways and then making sure that the user is taken care of. I think that's something that we can do at Woo to give us a differentiating factor and a big advantage.
I love to hear that. And I definitely agree that a lot of exchanges I see, especially the mid-tier ones, have a lot of short-term thinking and short-term approach to things. And if you were to ask me hey, do you feel super comfortable putting all your crypto on this particular exchange? Even for short-term trading purposes, the answer would be no. So I'm glad to see Woo taking a more professional approach when it comes to your user experience and designing your exchange and whatnot.
Where do you keep your crypto, Kevin?
Hardware wallets, also some top tier exchanges like US based custody solutions, things like that. I kind of spread it out, but yeah, I do use some mid-tier exchanges. I'm not going to lie, but it's always okay, don't put as much, don't put more than I can afford to lose on them because I'm fully ready for some of them to just go bankrupt one day. I would not be surprised at all.
Now, what is it you look for? What motivates you to put money on these exchanges and to use them?
Mainly just the markets available and liquidity. Just if I want to trade different types of products, just whatever's a new coin, perhaps just whatever is I'm looking to do. If there's something available that also is safe enough and usable enough, then I may try it out.
Yeah, it does go back to opportunity and allowing users. I think from an exchange perspective, you usually break it down into three different things, and one is being able to learn about these sort of products. The second part is having access to them, being able to trade, and the third is being able to capture that value, right? So the third part is having the tools within that exchange and the user experience to trade well.
Right.
So I think when you're able to perfect across all three of those pillars, your users can come there, they can find out about new opportunities, then they exist, the markets are there, and then you have the tools to really capitalize on that upside. So yeah, I think that's things that we can definitely work on in the next cycle.
For sure. And I also want to ask you, besides just growth, like what
Right.
other big things are y'all working on right now that you're excited to launch in the next like 6 to 12 months? Could be tech, could be product, it could be partnerships, anything's fair game.
Right. Well, I haven't really introduced like Woo properly. I'm sure some of your listeners have heard of it, but I think, where we sit is we have a fully fledged DeFi offering, a DEX, an earn product. We have a fully fledged CeFi offering, the SEX. It's called WooX. So between WooFi and WooX, we cover the C DeFi space pretty well. So we're constantly thinking about what's happening at that intersection, because all the users want, the simplicity that we associate with the CeFi platform, right? You click deposit, your funds are there. You click buy asset, it's done, right? You don't have to worry about things like gas and getting sandwiched and stuff like that. But then on the other side, they want the self-custody aspect that you mentioned, right? They want to feel safe. They want to control their keys. So, things that we're focusing on from a product standpoint is how can we combine the best aspects of both of these to give people, every opportunity that exists? Because the last couple of months we have seen that a lot of the really big opportunities, they're happening not on CeFi platforms, they're happening on chain. So how can we unify that experience, right? That's one thing we're thinking of from a product standpoint. Building trust, because no matter how many F1 cars you slap your logo on, like it's not going to let users trust the brand, trust the product. That probably does help, right? So that's another thing we're working on. One way is just being more present, right? Being more offline events and talking to users and letting them understand that we are like a team of people, like-minded individuals who are prioritizing things like transparency and good ethics and things like that. So yeah, I mean, I think that's what we're focusing on. I think you asked over like the next year. Internally, I think we're on very short cycles because the industry has become so dynamic. Tech standpoint, I think we think in quarters. For my team on the ecosystem side, where we're working with partners, investors, things like that, I think it's even shorter, right? More monthly targets and things like that. So,
Got it.
That's how we're thinking about things.
For sure. So I know you told me separately before that y'all aren't really focusing on the U.S. markets currently, but more other jurisdictions and whatnot. That's something I wanted to ask you about, actually, because do you feel that running an exchange has become more difficult in the past 1.5 years during this bear market, as we saw all those things happened, other exchanges getting sued and whatnot? Has it, as an exchange operator, how do you feel about that?
Yeah, it's a good question. I think in many ways it has gotten more difficult, but in other ways it's gotten a lot easier. So that first part you mentioned about how this space is up for grabs, right? Like that in some sense makes it a lot easier. It's a lot easier to get mind share. When we were battling in the beginning of the bull market, we had a very so the 2021 this time we had a more immature product line, and our competitors had endless marketing budgets, right? So Staples Center was becoming Crypto.com Arena. The Miami Heat were playing at FTX Arena. It's very, very difficult to compete in that environment with limited human resources or financial resources. So in that sense, it's gotten a lot easier, right? Businesses are now forced to play within their limits. So we're seeing massive layoffs. We're seeing massive cutbacks in spending. And the layoffs creates an interesting one, because from a hiring perspective, it's never been easier to get top talent, right? And so a lot of these talents are coming, they have 3 to 4 years of working at top exchanges or top crypto businesses or layer 1 blockchains, whatever, right? There's a lot of talent to be had. So in that sense, it's also a lot easier. Where it got more difficult, I think you touched on it there, like regulations. Like the US is, pretty much off limits. A lot of the people we talk to are still in the US. They're getting out, or they're at least You see like what Coinbase, Kraken moving to Singapore, A16Z is moving to London, right? Like you're seeing a lot of people going offshore, and that's to be expected. I think at least for a few more years until another like election cycle goes through. At least we'll be stuck in this situation, which is unfortunate because a lot of the early innovators and investors did come from the U.S. So it's a little bit sad to see. I think go ahead.
You mentioned that y'all are talking to users and doing offline events and things like that. Not in the U.S., of course, but I'm just curious, like what specific jurisdictions or which cities around the world are y'all like putting a lot more focus on when it comes to ecosystem growth?
Right. So, September is going to be quite busy because at the beginning of September, there's some Ethereum events in Europe. ETH Warsaw is happening in Poland. We should have a presence there. Korean Blockchain Week is the week after that. And then the week after that is Token 2049 in Singapore. So Korean Blockchain Week and Token 2049, these are massive events, some of the biggest in Asia. So I would say, like, from what jurisdictions are we targeting? I wouldn't say there's a specific one, but we do see a high concentration of sophisticated users and investment money coming from Europe and coming from Asia, particularly areas like Korea, Hong Kong, Singapore, things like that.
Has Europe opened up in terms of activity quite a bit since like Mika and like the spot ETFs? All that stuff's coming out of the Europe side. Would you say like activity is starting to pick up from there?
So actually next summer, it's going to have some of the micro rules are going to come into play, and that's going to make it more challenging for products who offer things like derivatives. There's a clear path for a basic offering. And this actually leads into a point that I did want to touch on about, all the different regulations are now putting out these licenses to be a crypto exchange. And a lot of people think that is, you go down to the office, you sign some papers, and next thing you know, you can run a crypto business. But it is in some way, it's somewhat of a poison chalice when these regulations are introduced, because for one, it's very expensive to apply and maintain one of these licenses, usually 7 figures just for one jurisdiction per year to maintain, right? So you think of all the different jurisdictions you operate, and it can be quite costly to go this route. But the bigger issue is not the financial side. I think the bigger issue is you're now under the microscope of regulators, and their ideas, their policies change quite quickly. So say you're offering some staking product or something one year, and then they decide they no longer want to allow that. It's very hard now as a regulated exchange to become unregulated. It's a difficult choice. You have to look at that market. You have to say, is the ROI on just servicing users in a not very innovative sort of way, just offering them like spot markets, Bitcoin, Ethereum, these type of things, is that going to be profitable enough for us to really pursue this? And there's a lot of internal like legal costs and things like that attached on top. So when you say Europe, is it getting easier? Yes. If we want to offer a very basic spot trading product, I think it is becoming a lot more easier, and we could go a very fully regulated route. You could advertise anywhere, but it's a road that once you set on it creates a lot more challenges internally. So I think we're trying to be very, we talk to a lot of sources, we talk to a lot of legal teams, we try to get the best information possible when making these decisions, and I think it'll be interesting to see how it actually plays out in practice. Yeah, that's actually I didn't know that they would potentially like change the rules for staking and derivatives, so that's great to understand. Well, I mean, you look at the US, you look at like what the problem Coinbase is having, where they're getting sued for offering a staking product, but the year before they submitted all their products to the SEC to get approved for their IPO. So, this happens quite a lot, where legal teams are like, what do you want us to do? You agreed to this. For Europe, actually, this situation played out before with things like CFDs probably a decade ago. So it's actually interesting to see. Crypto's not the first one that's going through this phase. I think long-term regulation will prevail, but maybe that's over a 10 to 15 year stretch. And so we have to think about what gets us the growth in the next cycle, right? Well, let's just have that dominant position, and then you have more resources to really bring on all these legal resources and approach regulation from a different angle.
That makes sense. I want to shift gears a little bit. So
Sure.
One of the first things that that you guys are known for is being great for institutional clients, like a great experience for them. And and so I know you mentioned you're talking to users, probably talking to some of your institutional clients. I was wondering if you could share some things about their sentiment right now. Like, are there new ones entering? Are they, or are the old ones bullish? Or are they kind of sidelined right now? Like, what are they feeling currently?
Yeah, I think our definition of institutions has changed a little bit. When we started in 2019, we were making institutional liquidity products, and a lot of those clients were tier 2, tier 3 crypto exchanges. And a lot of them were growing quite quickly. CeFi was the only game in town, so they were popping up in all these different geographies with their own localized approach, and that worked pretty well until DeFi came, and then also you had things like Binance just grabbing an enormous part of the market share. Nobody could compete with them. So now when we talk about institutions, I think from a Woo perspective, we're looking at more like crypto hedge funds and yeah, it's trading related, perhaps banks, things like that. And yes, I think some of them may have left after the Luna, Three Arrows Capital, FTX, debacle of 2022. But a lot of them are in, we're hearing a lot that a lot of them are in. A lot of them are setting up entities offshore, something we talked about before. So, how you can interact with these different institutions is changing. But yeah, I think institutions are definitely here. You just look at, you see Larry Fink on CNBC talking about how Bloomberg is going to, how Bitcoin is going to be, a dominant asset in class. And I think that says all you need to know about how institutions are thinking.
Yeah, that makes a lot of sense. Just curious, what about retail? What are you hearing from your
retail?
Your perspective on the retail side?
Yeah, that's a tricky one. I mean, I think retail is very much at the bottom of this bear market cycle. A lot of them are doing well on chain right now, but from you look at the NFT floor price, they're all getting hammered quite hard. So I think we do need some new narratives to suck them in. But I think it's our opportunity to build right now and build something that, it makes it less player versus player in the market. Things that a little bit easier to understand and to grab these opportunities. I think that's something that we can work on until these new narratives emerge and retail starts flooding back in.
Well, this is a perfect segue because speaking of new narratives, actually, I want to shift gears from talking about Woo related stuff to just asking Ben, about your take on the markets, because I know you've been a longtime participant as well. So I guess the first thing I want to ask you is, what do you potentially see as the next big area in DeFi, if you have any thoughts on that?
Well, I think DeFi will be huge. I mean, we're seeing all these RWAs, and we're seeing, people tokenizing things like treasury bills, and I think that's going to stay. That's going to be a huge thing, but that's going to be slow. The stuff we're seeing on chain this summer, I love the things like the Telegram bots, because I think it puts the power to do things into a retail-facing app like Telegram with 80 million users who open it for every task they do throughout the day, kind of like a super app. I think that's really powerful. And I think the medium is not as important. It's not the fact that it's a Telegram bot. It could be a Discord bot or some other application bot. But I think that's the right thinking. And as you know, Telegram has a native wallet within their app. So all these people are going to get exposed to cryptocurrency. And then that's great for someone like Woo because, you know, we thrive on users and volume. That's what we want. So thinking how we can work alongside these narratives that get us closer to retail will help a lot. This summer it's been interesting. Now we're seeing things like FinTech. You know, we're seeing the layer 2 explosion on particularly Base looks like they're doing a really good job right now. I think Base has a lot of potential just from the fact that it's, you know, everyone calls it like the Western BSC. They have a lot of clients. You know, Base has a lot of influence in this space. They can convince more people to go on chain. And Coinbase has actually some really good products. So you look at the Coinbase wallet; it's a really good DeFi offering. So we're from a DeFi perspective, we're really excited to support Base. And I think there's too many trends out there, but all of them that are getting us closer to a better user experience for DeFi and CeFi, it's a win in my book. But what about you, Kevin? I'm gonna throw it back on you. What's the trend that you're most excited about?
That's a great question. I might not be able to say anything super insightful right now, but I did want to talk to you about Base though, because I have been looking into Base more. And one thing I'm curious about is how do you see Coinbase actually benefiting from this? Or is it just kind of like we're going to do it for the ecosystem because a rising tide lifts all ships? Is it more like indirect benefit? Or do you think they're actually going to be able to be like, hey, Wall Street, check out this Base. We're going to like kill it because of it.
Well, I think Brian Armstrong has to do something, right? He's kind of caught in this U.S. regulatory battle, and the price of their stock is correlated to, you know, the amount of business they're doing. And I think, you know, this does a lot for the company if they can control a sizable amount of DeFi activity, institutional DeFi activity happening in their ecosystem. Then that value will get reflected in the stock price. You know, it's just a different way of doing things, really, like token versus traditional equity. And, you know, it does make sense because I think Brian Armstrong, when he created Coinbase in whatever, like 2012 or whatever, you know, he was a very early guy, a very innovative person who believed in the ethos of decentralization. And I think that hasn't changed, right? Just because his business has become kind of the poster child for regulated CeFi, I think he still has some of those core ideologies at heart. So yeah, I think that has a lot of opportunity for us, especially, you know, the way that WooFi works on a DEX, right? We're very we like to get flow from other brokers. So, for example, a lot of our flow comes from, you know, 1inch or OpenOcean or 0x, Paraswap, these kind of places. But it, you know, it gives us some opportunity to think about what a more institutional facing product might look like, and then how WooFi can integrate to provide liquidity there. And so, yeah, I mean, we're very focused on that. We do see a lot of layer 2s that we think probably won't be here in a few years.
There's too many,
but Base is not one of them. Yeah,
there's too many.
Exactly.
Actually, you just brought up a point. I want to jump around a little bit. So WooFi DEX, your order book DEX is built on Near protocol, if I'm not mistaken, right?
So yes, the V1 is built on Near protocol. We're actually incubated a project called Orderly Network alongside Near protocol, and they were basically trying to create this on-chain, on-demand liquidity layer that anyone can build on top of. And V1 was very successful in that standpoint, and for V2 it's looking like a omni-chain approach to all this. So I don't want to get into too many details, but you know, yeah, I think
so. V1 was the Near protocol one, and then the future is omni-chain. Is that what I'm understanding?
Yes, that's the correct way of thinking about it.
Oh, okay. Because when I saw that, I was just curious, like, why did y'all choose Near protocol, or was it more like a partnerships type thing?
Yeah, it was a partnership thing, and we've known the Near team for a very long time. We have a common investor in Dragonfly, and they're obviously very focused on the tech side of things.
Yeah.
So working with them was a great experience. We got to share a lot of resources, and we're still going to be supporting the Near network. But ultimately, for this platform to really grow, it needs to be everywhere that users are, and that will. The omni-chain is definitely the way things are going.
Awesome. I'll definitely be on the lookout for that. I want to go back more to just a couple more questions about your personal takes.
Sure.
Just curious, if you don't mind sharing,
I have terrible trades.
What is your personal strategy right now? You said it's kind of like at the retail's at the lowest point. So what's your personal strategy at this point in 2023? Are you just hodling? Are you trading? Are you doing different things in different areas? Just curious.
So personally, like I have two personalities on this. The first one is that because we're building in this space, I need to try everything. So even if it's a rug pull, I still need to understand the psychology, what they're trying to do. So I would say there's one part of myself that's just very reckless. Goes everywhere and tries everything. And then the other side of me is more maybe pragmatic in the sense that if you look at the overall market, you know that there will be another cycle, right? There will definitely be another cycle, and then trading against it right now, trying to trade in these conditions can be a very painful experience. So unless I'm able to monitor this like full time, 24/7, sleepless nights, staring at charts, reading the news, I'm probably not going to be very successful trading it actively. So I'm just looking for projects that, I know are going to be part of that next cycle, right? And so, obviously our own project, I like to think that we're going to be one of the blue chip assets of the next cycle. So I'm a really strong believer in what we're doing. You look at other builders in the space. I guess I'm lucky in the sense that I get to talk with teams, and then you get to see, okay, who's really focused out there, who's really dialed in. So some of our partners like Trader Joe, like those guys are great. They're innovating in DeFi. They're building new AMM models, and then they're so detailed on the marketing side as well. So I believe in some of those, what they're doing. You look at things like Lido with like liquid staking and how much TVL they amassed. And as long as there's not some black swan there, they'll probably be there. So yeah, just trying to find products and then thinking about, does the product make sense? Yes. Is the team focused on the right things, right? And then once you check those boxes, then it just comes back to waiting for the market to return, and you'll be there.
About that though, because this is something I've been kind of debating with my audience and community. Personally, I think the lows are in, and because of that, I've started to deploy more and be less sidelined in my stable coins and whatnot. Like starting to buy more, like you said, altcoins projects that I think are going to be successful, and just hold it until the bull market returns. So I guess that's what I want to ask you. Like, do you think the lows are in? And if so, are you starting to kind of deploy more long-term plays currently?
It would take a lot. It would take a lot to go back to that FTX collapse low of 2022, right? I mean, even the fact that one of the biggest exchanges, probably the second biggest exchange, maybe even one of the top in terms of like overall brand recognition, was able to go from, fully operational to insolvent in the time span of a week. And then the market reaction to that was not that strong. I mean, that's usually a good sign that the sellers are exhausted. I can't say that there won't be more, black swan type events, whatever it is, traditional markets collapsing, nuclear war, who knows what could happen. But if you exist in the mindset that, like I do, that the bull market will be back, things will be sunny again, then, I would probably take your strategy as well, which is starting to find some things. But this is my personal thoughts, and I'm actually a pretty terrible trader, so take that with a grain of salt.
No worries. And I guess a great note to wrap it up on is just purely fun prediction. When do you think the next bull market will come back and officially begin?
I've always been focused on the halving date. I feel like that's too strong of a indicator to the market that things are going to start improving, and it's going to bring a lot of like press awareness, media awareness, and then that can be a catalyst for bringing in retail. I feel like the Telegram bot trend, the Telegram wallet, this was something that is substantial and meaningful, as opposed to the earlier trend we saw like meme coins and Pepe. I didn't think that had any sort of legs to it, but I think the new narratives could start to spring up around this. So if you had to tie me to a burning stake about something, it would probably be April of next year. But I'm one of those guys who wakes up every day and is eternally optimistic. So
that's good.
If you ask me, it's tomorrow.
All right, Ben, thank you so much. Had a great time chatting with you today. I guess any final thoughts you want to share with our audience before we wrap it up?
Nothing really. Just thanks for having me on here, Kevin, and hope that you and your audience will continue to focus on things that are really important in driving our industry forward, and then people who are building transparently and ethically, that these are the types of players who are going to get rewarded in the next cycle, because that's what we believe.
I hope so as well. And I know a lot of my audience already knows Woo Network because I made some content about y'all like last cycle that did really well,
great
actually.
Content.
Yeah. But yeah, I'll still leave your personal social media and also Woo links just below for anyone to check out.
Perfect. And we need more content from you, Kevin. Keep it up.
Thanks, Ben.